Hello there. Welcome back to Introductory Accounting and 4. In this video, we want to look at a question from June 2024. And this is question 2 on that question paper. And it's on the preparation of the bank reconciliation statement. So the question is the following information appeared in the books of Barbarian traders on 31 May 2022. So we've got questions that are there, but we are not only going to concentrate on as the second point, where it says prepare the bank reconciliation statement on 31 May 2022 to reconcile the balance of the bank account with that of the bank statement. So that's what we are going to do. But remember, when we are preparing bank reconciliation statement, we should take note that a bank statement is a true reflection of what we see in the journals. So what we are saying is whatever we say in the journals should be reflected in the bank statement. Whenever there is a variance between those two documents, there should be a reconciliation that should be put in place so that it can reconcile the two balances. That is the balance of the bank statement and the balance that we'll be having in our books of account, in the bank account, be it now the cash receipts journal and the cash payments journal. So what is in the cash receipts journal should be seen on the credit side of the bank statement, and what is in the cash payments journal should be seen on the debit side of the bank statement. If there is a variance, there is need for the preparation of the bank reconciliation to pick omissions, to pick errors that have been made, etc., something like that. So this is what we are going to do. So in this case, we are just going to prepare the bank reconciliation statement. So if you go to the next page, you'd see that our question is continuing, and we are on the information part. That is our information that we are given there. So we are supposed to go through each and every information that we are given there. The first one is saying the bank account has a credit balance of 89,237 on 1 May 2022, which we are very concerned about according to this video. Then two, a comparison of the bank statement of the cash receipts journal and the cash payment journal on 31 May 2022 revealed the following differences. So these are the differences that made the two balances not to be the same. So there was a need to prepare a bank reconciliation statement. So you can go through each and every item, maybe before you start to answer the question, so that you can have a true reflection of what is transpiring in the question that is in question. So we go down up to information 2.1.2, and then we see that our question has got 38 marks. Are very important to take note that our question has got 38 marks. So let's just see what we are going to do. So we are just going to pick the balance that we are going to start with in the bank reconciliation statement. So if you go to the other section, we see that this is going to be our bank reconciliation statement. But obviously, we are going to start with the balance that we are going to locate in the question that we are going to start with at the beginning of that bank reconciliation statement. So let's just try to see. So if you come here on 2.1, it reads the bank statement from Mozambique showed a favorable balance of 295,199. So this is the balance that we're going to start with. But very important to take note, the keyword there is unfavorable. It's unfavorable. So when the balance is unfavorable, it means it's a negative balance that we're having on the bank statement. In other words, we are saying it's an overdraft. When it's an overdraft, it means it's a debit balance. So whenever it's unfavorable, it's a debit balance, which is very important for you to take note. It's a debit balance. So when it's favorable, it should be a credit balance. Remember, we said what should be on the debit side of our bank account or on the cash receipts journal should be the same with what we're having on the credit side of the bank statement. So whenever we have money being deposited in our bank account, it should be on the credit side. So very important to take note. So unfavorable should come on the debit side. So we go there and just indicate that this is our opening balance in the bank statement, in the bank reconciliation statement. So we're just going to say balance, or we can just say unfavorable, or just say a balance SB. Balance SB bank statement. Right, so we're saying it's a debit balance of 295,199. So this is what we have, and then we can go to see now. We go item by item, try to pick uh, errors that are going to affecting our bank reconciliation, or errors that are affecting our bank statement. That is, those are the errors that are going to put in the bank reconciliation statement. If an error is occurred in the journals or in the books in the bank account, we are not going to. And that error is not affecting the bank statement. We are not going to put it on the bank reconciliation statement. We only put errors that affect the balance of the bank account of the bank statement. So that is what we are going to do. For example, we might have an additional error in the journals. It's not going to affect our bank statement, so we are not going to adjust our bank statement. But if it's affecting our bank statement, that's when we are going to adjust for that. So if you go to the 2.2, and we are now on 2.2, it reads the following checks have not yet been presented for payment on 31 May 2022. What does it mean? It means all these checks that we are given there, they are not yet presented. And when they are not yet presented, we are saying they are still along the way. They're going to come to the bank and then be processed. So we are assuming that these checks will go to the bank. So we are supposed to put them on the bank reconciliation statement unless we are told that the check has been lost. Then we know that it will never reach the bank. So we never adjust it in the bank reconciliation statement. But in this case, we are assuming that these checks are going to be processed. So these are outstanding checks that we are just going to list there. So we are going to debit them. Remember, whenever we have checks, they are going to go to the debit side of the of our bank statement. So we're going to debit side of the bank reconciliation statement, and we are going to say outstanding checks. So if you go to our bank reconciliation, you can just write them as outstanding. Outstanding checks, and then maybe we can see the semicolon that we can we have check number. Let's just check there the check number in the amount. First, we've got check number 100, which is 38,150. And then we've got check number 106, 21,236. So we can just go and maybe try to enter those two. So firstly, we have got check number 100, with an amount of 38,150. Then we also have check number 106, 106 with an amount of 21,236. Then we're going to check other checks that we have. Now we have check number 117 with an amount of 49,524, and check number 152 with an amount of 54,470. So that's exactly what we are going to do. So go there again. We update those checks. The next one is check number 117 with an amount of 49,524. Then we have check number 152 with an amount of 54,470. Right. So we have exhausted the checks that we are given them. So we can just go to the next transaction to see if it's affecting our bank reconciliation. 2.3, check number 155 to the value of 12,965 sent to Sasco Limited as payment of our account must be cancelled. This check was stale. So you see, this check, it should be cancelled. So it has highlighted that it should be cancelled. Whenever a check is we know that it's not going to reach the bank. We don't update it in the bank reconciliation statement. We just leave it. It has to be corrected in the journals. So this you see that this error is going to affect our journals. We are going to make a reverse entry there so that we remove it since it has been cancelled. But in our bank reconciliation, it's not going to reach the bank, so we are not going to adjust it. So we go to the next one, which is saying Dalia settled their account by depositing 42,784 directly into the current account of Barbary Traders. So what does it mean? It means this was directly deposited into the account. So it's there on the credit side of the bank statement and it's correct, it should be there. But the only thing is that the journals didn't capture that. So when we are now updating the journals, that's when you're going to include the 2,784. So we leave this one. We go to the next one, 2.5. The bank statement of Mabele Traders reviewed a credit entry of 2,214. It was for Mabele Limited, another client for Woza. So this amount was not supposed to be reflected on our bank statement because it's not for us, it's for Mabele Limited, as we are Mabele Traders. So what does it mean? We have to remove this entry. So the important part of it is we have to identify, is it appearing on the bank statement? When it was entered in the bank statement, was it on the debit or credit side? So let's go back and see. The bank statement of Mabele Traders reviewed a credit entry. So it means it's on the credit side. This 92,214. So to remove it, we put it on the debit side. So this is just a bank error. So we are just going to say debit bank error, debit bank error. So 92,214. So we go there. We are saying debit bank error. And we are saying this bank error is 92,000. This bank error is 92,214. So this is what we have. So we go after that again, we see what do we have. We are seeing that we are now on 2.6. The current account of Mabele Traders was not yet credited with a deposit of 375.6, which was made on 31 May 2022. 31 May 2022, and we are on 31 May. You see, so this deposit is along the way it's coming. The assumption is that the deposit is going to reach the bank and be processed. So here we are saying the current account of Mabele Traders was not yet credited with a deposit of 370,506, which was made on 31 May. It was made on 31 May, which was on the day that this conciliation is being prepared. So what does it mean? It means this deposit obviously is going to reach the bank and be processed. That is the assumption that we have. If something happens, it's going to be updated in the next financial in the next period. So what we are going to do is we are going to enter this 370,560 on the credit side as a deposit, since we are expecting that deposit. So we go there and say outstanding deposit. And whenever it's a deposit, it should be on the credit side. Remember, whenever we money is deposited in our account, which it is credited on the bank statement. So we go to the credit side and say 370,560. Right. So we go to the next one, see what exactly do we have. So after 370, we have got item 2.7. Valeta's check of 1,456 runs in payment of her account had been returned by the bank marked repair to draw insufficient funds. What does it mean? It means this was a dishonored check. A dishonored check, we don't include it in a bank reconciliation because it was dishonored. It will never reach the bank, so we ignore it. We leave it. We go to the next one. So it means this check is only going to be adjusted in the journals. That's why it was supposed, as soon as the check is drawn, it is updated in the journals. So when whatever is going to happen along the way, we have to remove it. It will already be in the journal. So this is what we have. So 2.8, a check to the value of 49,754 withdrawn by Mabele Traders Central Office out of their current account appears on the business bank statement. So what does it mean? It means this money was not supposed to be reflected on our bank statement. That's a mistake. And what does it mean? It was debited since it was withdrawn. When we withdraw, our bank statement is debited. So it was debited on our bank statement, and it was not supposed to be debited. So you have to go to the credit side to enter it so that we remove it. So it's a bank error again. We can go back there and try to indicate that this is an error that is transpired. The bank debited a wrong check. So we are saying it's 49,754. So we are saying credit bank error. So we are just yes, 49,754. So we are saying credit. I'm going to just say correction. Let's just try to see. Or just say correction of bank error. Correction of bank error, and we are going to say it's what 49,754. Right. So this is what we have, and then next we see what we are supposed to do. Right. We go to the next one, which is 2.9. It says the bank statement showed a monthly stop order of 11,658 in the favor of DSSJ Security. This was to pay the owner's fire extinguishers insurance. So this is it's a transaction that was effected on the bank statement, and it's correct. It's a stop order, but on the part of the journals, it wasn't captured. So this is kind of a transaction that needs to be updated in the what in the journals. But on the bank statement, it's correct. It's there. It was supposed to be deducted as a stop order, but we're only going to put it on in the cash payment journal, so we can leave it. The bank statement 2.10. The bank statement showed a debit order of 10,238 in favor of PLK as a payment on the previous car insurance. Correct. On the bank statement is correct. Remember, debit orders, they can only reflect on the bank statement first before they are captured in the journals. In the journals, they can only be able to identify that there was a debit order when they get hold of the bank statement. So this one, we can leave it. It's supposed to be corrected in the journals, and included in the cash payment journals. The 2.11, check number 2144 41,602 was mistakenly debited twice on the bank statement. So this one is an error on the bank statement. It was debited twice. You see, it was debited twice, which is a mistake. So we have to remove one of them on the debit so that we remain with the one which is correct. So to remove the one 41,602, we go to the credit side and enter it as a credit bank error. Check number 214. Check number 214, which is 41,602. So we can here say correction of check number 214. And we're saying we go to the credit side, and its amount is 41,602. 41,602. And then we can just go there and see if we've got still have anything. You see, the last one is saying the check number 219 was wrongly entered in the cash payment journal as 23,890 instead of 20,980. Check was issued to Telcom. This was an error which transpired in the cash payment journal. Our bank statement is correct, so there's no adjustment that we're going to make. So this is the last one. So we can now balance our bank reconciliation statement. How do you balance? You add the total of the debit, you put it aside. You add the total of the credit, you put it aside. You compare the two totals. Which one is the greater total? The greater total should come in between the double lines. That is here. Right. The greater total should come in between the double lines here. And then the side with the smaller total, that's where we are going to put the balance and to put the amount of the difference between the two totals. So in this case, if you add the total of the debit and add the total of the credit, you are going to notice that the total of the debit is the greater total with an amount of 550,793. So we are saying the total of the debit side is greater with an amount of 550,793. which should appear on both sides in between the double lines. Then if we say 550,793 minus 41,702 minus 49,754 minus 370,560, or you can add the total of the credit, then you subtract it from this total of the debit. You get the difference here, which you are supposed to put with the side that is that is a smaller total, and the difference would be 80,877. 80,877. And this is now uh, the credit balance as the bank account. Remember, this one is a debit balance. The balance CD is on the credit side here, but the BD is on the debit. So it is a debit balance. Well, the debit is the one which is greater. So it's a debit balance. But on the banks, on the bank account, in our books, it will be a credit balance. It will be the opposite. So here we are saying credit balance as the bank account. In the bank account, it's a credit balance. You see, we are saying bank account. In the bank account, in the books, it's a credit balance. But on the bank statement, it's a debit balance. Being highlighted by what we are seeing right now. So this is what we have. So let's just take note of how do we correct the errors in terms of the comparison that should make with the bank account in our books that is representing our cash payment journal, cash receipt journal, and also our bank statement as very important for you to take note of that. So this is what we have, guys, according to this video. Those who haven't subscribed, please subscribe and share. We are still coming with new videos. As for this video, I'm signing out. We'll meet again in the next video.